Good morning, everyone. Welcome to the new week. Here we are. Lots of moves going on this morning, particularly in the yen pairs, dollar yen particularly. So we're going to crack on straight into things, have a little bit of a rundown of what happened last week. I've just been told I've got a blank Zoom screen now. Let's get my share screen on there. Boom. There we go. Right. So we're going to crack into some of the bits and pieces that happened last week. Look at some of the data. Obviously, the big data from Friday was the non-farm payrolls. So we'll have a look at that quickly, just to run over what it all meant for the markets on Friday. Now, the non-farm payrolls came in pretty strongly. As we can see there, 372,000 from a 268 expected. Nothing in the data indicated any problems in the labour market, which is something we're going to be watching for over the next few months, because we've seen some weakness coming into things like the PMI data, where the employment components have moved into contraction. So this data was still pretty strong. Wages, fairly robust. Unemployment rate was okay. A little dip in the participation rate, which, as we spoke about on Friday, can affect the unemployment rate. So a little dip there, but nothing really too much change-worthy in the unemployment rate. So pretty strong labour market, and this is what the Fed wants to try and take some steam out of with their hiking. So there's nothing in this data that will get the Fed changing their path at all. So we still look like we could be full on for 75 pips at their next meeting. Moving to some of the other comments that we've had out overnight. China being something, again, we've got to keep an eye on for the virus impact. Shanghai, the big port there, obviously. They're entering another mass testing phase between the 12th and 14th of July. This is because a subvariant of Omicron was found somewhere, and someone got tested for that. And so now they're doing another big mass testing. The local government has already stopped indoor activities in main populous areas there. So again, if this builds into something that's going to impact wider lockdowns, we could see that manifest itself in risk trades, particularly because of the supply chain issues that we want to see easing, that countries want to see easing, that are impacting things at the moment. So if we get wider lockdowns, then again, particularly in the ports, we're going to have some more trouble in risk trades. We also had some data out from China overnight. Their CPI year on year came in at 2.5% from a prior 2.1%. And a few people looking at this just to maybe think that maybe China won't go as strongly with stimulus or start scaling back stimulus it's looking at. But it hasn't really gone strong on the stimulus measures. We've seen some cuts to some of the minor rates, interest rates, loan rates, that sort of thing, mortgage rates. But nothing too massive as of yet. So it might be that inflation seemed to hold back on this minor stimulus that they've got going. But something that obviously we need to keep an eye on. From Japan, we got obviously the news that the ruling coalition won the upper house election. We had PM Kishida coming out overnight. His first comments straight after the election, sort of as Tokyo came online, were pretty wishy-washy, nothing really strong. But he did make some comments later on in our evening that they're going to start impacting wages. They're going to start putting plans together to get wages up, and partly to help against the cost of living issues that they've got over there, and that they were going to into reserves. Now, I was a bit. I needed a bit of clarification on what these reserves meant for extra stimulus measures. My colleague came and explained that the reserves will be other programs that are continuing to run, and other money, if you like, put aside for stimulus. So they're basically going full guns blazing to get wages up, to help with the living crunch that's going on in Japan over there. So fiscal stimulus, that wagon is still going to keep flowing, if you like. Now, we got Bank of Japan's Kuroda out. Now, this is particularly interesting moment, because it comes after upper house elections. So what I wanted to see is his comments going to change? Are we maybe going to see a shift from the government because obviously, unfortunately, as Abe has passed away, he was the man who brought the three arrow in. That's been the backbone of fiscal policy pretty much in Japan for over a decade now. So I wanted to see whether we're going to get something that maybe changes the mood with monetary policy. But Kuroda was out and he was saying the same old thing. They're going to keep easing and to oblivion. And I think that's been one of the main things that we've seen dollar yen running higher on. Not so much because of anything new, but it looked like when we got those Kishida comments that they're going to keep blasting the fiscal stimulus, then Kuroda as well saying they're going to continue. It's the market maybe was pausing ahead of the election, and now we've over that hump and Japan's going to carry on as it is. I think that's why we've seen one of this next leg up in dollar yen. You got any thoughts on that, Kay?
Absolutely. It's good morning, everybody. It's exactly that. We had as the majority confirmation came in, we had like a small move higher in the dollar yen from around, call it figure-ish, up to the 30s. And then, as Kuroda said, no change in plans for now. It did the next leg higher again. Yeah, we have Bank of Japan next week on the 21st with the new projections as well. There's been already a few rumors out which are, yeah, basically same as everywhere else, revising inflation a bit higher, but cautioning on growth, especially in Japan, where they're still massively struggling with supply, and yeah, still looking at high energy costs. Although we have seen those commodities and energy come off a bit over the course of past week and even this morning. So I think it's more or less the fiscal stimulus, since Japan has basically since the big quake in 2011, they haven't done anything else but put in stimulus packages. So there's still, of what I understand, there's still some leftover from the big quake, actually, because the costs, there had been so much repatriation at that time by the Japanese companies that the government didn't have to use all of it. But in the meantime, there's been already 2 or 3 other packages, so they still have some reserves. But what it really means is that indeed Japan is just going to continue to press on the fiscal side, and Bank of Japan seemingly helping them to fund it. So yeah, take the same team and just continue right here and now, unless we see more commodity coming off, more recession trades in the rest, that would put a brake on yen pairs. Perhaps more yen crosses than dollar yen as such, but yeah, we take the same and we go.
Yeah. Well, we'll look at the price moves in greater detail in a moment, and I'll also bring my colleague Stelios in, who's no doubt fresh to get into it on the back of a holiday he's just finished. Just want to have a quick look at what's coming up this week on the calendar, because even though we've come off the NFP week, usually it's quite quiet the week after. We have got some decent events out. On the central bank front, we've got the RBNZ coming up on Wednesday. Expected a 50 pip hike there, so it's going to be hard to see any real change to the expectations there. What it's going to mean for the Kiwi is what is the rate path going forward. A lot of the market is expecting a 50 pip hike. As we've seen from the price moves just generally in the Kiwi, we're far from trading rate moves at the moment, unless they change significantly. You look at the Kiwi, for example, you wouldn't think this is a central bank that's currently in a hike path, but here we are. This is where we measure up the divergences. On Wednesday, we get the Bank of Canada, and a 75 pip hike is expected there as well. Again, This one I think might be a bit more open to interpretation. Will the bank go 50 or will they go 75? And again, the message on what they're going to do after that is going to be the important thing here, particularly for the loonie. Then into some of the data points we've got US CPI on Wednesday as well, US PPI on Thursday. Then Friday's a fairly busy day. We've got retail sales from the US. We've got the Empire manufacturing, which is a small number, but it's the first manufacturing number of the new month. It's usually that. Then we get the Philly Fed early next week probably. So that data will give us an indication on how things are going. That will lead us into the PMIs we've got going on. And Gavin in our Flow Show chat has obviously just noted as well, it's earnings week this week. So this is going to be a big thing for stocks, particularly to see how companies are faring with these rate hikes, to see whether, you know, businesses are losing business or whether it's all tickety-boo and everything's fine and dandy. So lots to keep an eye on. And also on Friday, we get the first Michigan number of the new month as well, which not normally a big number, but it's been cited now by Fed members because, and particularly Powell, because it contains inflation expectations at the consumer level. And this is something the Fed are going to be monitoring very, very strongly. And we saw a fairly decent move on the final number of the Michigan a couple of weeks ago. And that's pretty much what we're seeing across all the data, even the NFP on Friday. We got an 80 pip move in dollar yen, you know, yields jumping, and it's getting quite volatile as we've been warning. The data now actually means something for prices because the market is shifting around what it thinks that all these central banks are doing. Stel, we'll welcome you back, mate. Hope you can hear us okay.
Hello, can you hear me?
Yep, hear you fine, mate. Hear you fine.
Perfect. It's good to be back.
Mr. Beach, we're going to call you.
Yeah, I tried to keep an eye on the markets when I was away. I saw what happened with payrolls. My take from all this is that we continue on a macro basis with what
Stelios,
yes,
could you open your microphone on the restream as well, please?
on where, sorry?
On the restream on Eightcap.
Okay, hold on, let me open that.
Yeah, you have to open both. Yeah, because people didn't hear you at all over there.
So I've said for a while, I think my bias is to be selling rallies in risk assets and to be selling rallies in bonds. I still think yields are going to go one more pop higher. And then I think we're going to start seeing the effects of the tightening monetary conditions. We're going to see demand destruction, which is a natural consequence of tightening monetary policy, you know, all around the world. So I don't think we're done yet. I've said for weeks, for people who listen to us here on the Flow Show and on Face, I think 3,300 on the S&P is the level where the Fed is really going to take notice. And I think that's where they're going to start turning, let's say. But as long as equities are not crashing, and they're not, we've seen a 20% move lower from the highs roughly, but it's been orderly. There's no huge volume, there's no capitulation yet. So as long as that doesn't happen, I think the Fed's going to keep going full blast and see where that takes us. What surprised me last week actually was the euro dollar heading towards parity now. I think it kind of makes sense that the euro dollar has gone up down from 122, what was the recent highs, and down to here because we have this massive policy divergence between the Fed and the ECB. The ECB is telling us that, oh yes, inflation is a huge problem. We see it as very high compared to our target, and we're going to do everything we can to address that, and they're not making it. That's what's mad in my opinion. But I do think now that given what's priced and what the Fed has done and what's priced for the Fed, and given what the ECB I think is going to be doing, I think they're going to be a little bit more aggressive than the market thinks, and that's why I think the euro dollar is going to eventually turn higher. Now I've had the view that the euro dollar should have found support. It didn't, so I was wrong on that. But it seems now to be very, very stretched now, this divergence. And if you've been short euro dollar, great, you've done really well. But I wouldn't chase it down here, definitely not. The other thing I wanted to mention is we had Norway CPI this morning, 6.3% year-on-year CPI, up from 5.7, expected 5.9. So this is still beating expectations pretty comprehensively, and yet we are seeing this risk-off move, which is taking the kroner lower. So dollar Norway and euro Norway are rallying because they are moved more by risk getting sold rather than fundamentals on Norway. But I think this is going to change as well. I'm looking at dollar Norway to short that the 61.8 retracement from the COVID highs to the 2021 lows comes in at around 1060. If we get anywhere near there, this is it's going to be my cue to start shorting dollar Norway, and I want to short euro Norway as well, but I will prefer dollar Norway. Other than that, cryptos we need to talk about a little bit because they are, they've had a huge move from the highs. It's still a very big in terms of market cap asset class, and Bitcoin, the leader, is sitting precariously around that 19,000-20,000 level, and it is a huge level. And if you look at, I like that chart actually. It's a daily chart. If you look at it, it's just a sideways consolidation before another move lower. That's how I see it. So, people trying to call a bottom here, I think is very, very risky to do that. But cryptos have had a pretty terrible time the past few months, and unless central banks tell us that they're done, I don't think that we're going to be done with the downside in cryptos or equities either. So I'm waiting. I'm taking the cues from the Fed basically, and they're not telling us anything yet. So I'm sitting on my hands.
Yeah, I assume we're going to have to wait for more headlines, I suppose, on other funds blowing up and maybe some exchanges. That's been part of the reason why cryptos are not bouncing as much, I think, because we've had these problems with various funds and investment vehicles and exchanges and stuff, and it's been the usual not so stable, as Arif in our flow show says. So not so stable coins, and there's a bit of panic in there. So that's definitely one to look at. I hope you all stick around still, because no doubt Kay's going to touch on silver in a bit, and I know that's you're a big fanboy, big silver fanboy there. We'll have a look at some of the other pairs now, see exactly what's going on and what the price action is telling us. So dollar yen, we had this big move up overnight, took out the prior highs and this area around 136.70, took out the prior high into 137, made a fresh high up towards 137.30. This line I've got in here, it goes way back. Just to flick that up, it's just from some old levels, really going back to this sort of area here. Just trying to go back, you know, this is 1998, just to pick out where the potential, you know, big weekly candles or monthly candles show a bit of price action. So this area is why I had that 137.14 in. Not a big area to think about trading from, but just an area that we could find some trouble in. And as we've seen, we blew through it initially, and then we found that's resisted afterwards. And we can see in the initial move back down, we saw around that area 137.14, 15, it become resistance, and it's there again. So it's one of these funny levels that you just keep an eye on. Again, not something I'd lean against for trading initially, but if it further develops into some bit more of a level, we get a bit more evidence to suggest it's going to be a strong level, that's when you start to get a bit of conviction to try and trade it. Conversely, to the downside, well, the price has stopped bang on the old highs that we got up there. So, you know, technically it's a very nice picture. You know, here was the first high that we got back on the 21st of June. That's where it hit its head. So it's a bit of a similar move here when we broke it to this move, when we broke above 137.14, got to 1730, came back below, held it. So a bit of a similar, you can see how the price action does a similar thing. We broke this high, couldn't quite build on that, couldn't find support against the broken level, come back below, then it becomes resistance again, a little knock above, becomes resistance again. So we're getting a similar little play here at these highs. So this is the area you want to watch now. If we're going to push higher, we need to bust above those. If we start getting concerted price action showing us that this is going to become resistance, then those of you who are looking to try and pick those tops, that gives you your risk area to manage a trade again. So if you feel like having a short, this is a sort of area. It doesn't need to be huge, don't need a huge stop loss. You know, if we break the highs, we're on for more. That's where your risk line lies. But to the downside, support wise, holding this pretty steadily, you know, pretty much bang on the money. So a broken level has now become support. Technically, that's what you want to see. Moving forward, again, what I want to see, is this a real level, or is this, you know, just came at the end of Asia as the European markets opened? Is it going to become a solid support level? Is it going to give me or give us that potential price to try along? But again, you don't need to bet the farm on something like this. If it gets back below, you know, we're heading back down to test some of the other prior levels. You don't need to have a 100 pip stop loss on this. You know, tight stop. If you're wrong, you know where you're wrong. So for now, you know, each time we make one of these new highs, I get a bit concerned. Is it going to continue? Is it going to pull back? You know, those of us who, you know, waiting for decent pullbacks, been waiting quite a while. You know, we get these moves, but the dips are becoming shallower. You know, these series of higher lows are creeping in. Then we get one of these blowouts. Then we have a little bit of consolidation and the levels develop. In the wider trend, you know, it's still up. There's no break in that trend whatsoever as far as I'm concerned. And you know what they say, the trend is your friend. This is where you need to pick your levels, where you want to find the support. So now 136 is probably going to be the main support down here. Prior to that, you were looking down towards the 130s. So we're going to get this stepping up of support. And so while the bigger support levels hold, and you know, if you're playing the smaller ranges, keep an eye on the wider areas. The trend remains solidly in place. And as Kayla mentioned, you know, we're going to have to wait and see what the Bank of Japan do at the next meeting. Likely they're going to be unchanged and continue their policy. So what we might see nearer to that point, obviously this is something for a couple of weeks away, nearer to the point we might see a bit more consolidation, because the market will factor that risk in. As low as that risk may be, it's still a price risk that they change tack, maybe not as dovish as they have been, and the market want to get over that price risk maybe before moving on. Kay, what do you make of the levels here at the moment?
Yeah, for me, I have a zone here in this 137.2040. So as the people in our room know, I've been long again since Friday, because this well, I mean, no twice, yeah, because first of all, the 135 held, we couldn't even go really below, trying to correct it, and then on Friday, I found the numbers in the States, the combination between the PMIs and the NFP report good enough to get back long. So I'm long since Friday. I managed it around a little bit around here.
Do you want to take the chart, mate?
Yeah, I'm doing. Yeah, let me share screens.
So let me get out of that. So I'm out of Zoom.
Where is it? Over here.
Yeah.
Share, and then over here. Share. All right. I think I'm sharing on both platforms. If that's correct.
Yep, you are.
Right. So this is the shorter term for me. So there was this. First of all, which I still think is, well, this line is now starting to go up, but this one here, I've been repeatedly saying that this area for me is hold or fold, really, right now. The 134, a quarter and a half, I've been saying it already. But now in the meantime, we are building up on more support. So the 134.80 and then the 135.20. And then on Friday we held this 135 70-80 zone after the data, where the rest of the dollar was correcting quite a bit and not putting in a fresh high. Dollar yen first of all ramped higher and then came back onto the short-term support at least. So here I think we need to be a bit careful on this 137.20.40. But if it goes, there's a bit of an extension around 138 and a quarter, which is also a very long-term bit of a level. And then above there, I think we're talking about 142. Personally, I think if we reach 140 and above, we're going to hear a lot more about the MOF and possibly even the Bank of Japan saying this is really going fast. And especially because they're not stupid either, especially if the commodities and oil are not pushing higher. I think we really need to look a little bit at this connection between how the move continues in yen and how commodities and oil, because they are importing a lot of the stuff, are behaving. So cautious, yes, but to me, as I was saying before, the team hasn't changed yet. They're still the same team, still the same approach by Kuroda at least, and we haven't heard from any other BOJ members saying that, oh no, we should stop and start to put the brakes on now. We haven't really heard those people saying that. So okay, while we have Stelios on the line, first of all, silver. This one is one that I'm looking at, Stel, and you can comment anytime you want on this one. I'm having this zone, which is a bit of an extension here around 19, 17, 20, 30. We are consolidating, as you were showing. Actually, same kind of thing in the cryptos we're doing in the metals. We're consolidating here, but to me, there's a fair chance that we are going to have a look at this 1870, 18 and a half zone, unless we get more economic data supportive for a rebound in the global economy. Then I think the silver should be the one that starts to go higher again. And in that case, if it's the global economy holding up or doing better again, I think silver may be faster than gold actually. And then on gold, I think yeah, there's a few intermediate levels here, but there's these 1720s. Yeah, it's prior lows. Yep. But if recession we get due to central banks trying to get ahead of the inflation, there is, I think it's possible or there is at least a risk that we are going to this 1680, which is going to be the major support. Stella, are you seeing roughly the same stuff, or do you have different?
Yes. I think in gold the 1680 level is absolutely massive, and we've been talking about it even when gold was trading in the 1900s. And it's a very important level. Could it get taken out? Of course it can, but I think I think if it does, and you see something like a full breakdown, I mean, that will be very powerful. But at the end of the day, you have to remember that housing rates, rising yields, $19, these are short-term effects on precious metals. For me, I've said this for years now, the number one thing that affects the price, and I'm talking about not intraday or intra-week or intra-month, but more on a more medium-term basis, is the change in money supply, and that's as long as the supply and demand in these metals is constant, which it is. The change in money supply is the only thing that's really going to be driving this. And what is the change in money supply? Well, it's been going exponential. So I think we are lucky that we are seeing a move like this, which is going to give us really, really great buying opportunities. I put my buy level for silver at 1880. I do see the range that you were seeing, that kind of zone. I just fear that it might not get tested, so I put my level a little bit higher, and that will now take me full size long if we get there in silver. And I think a couple of years down the line, we're going to be looking at these levels and we're going to be saying, what the hell were we thinking, not buying more. So that's what people like Ram is writing on the chat. Oh wow, I'm making my move. You guys that have been listening to me, I've been waiting and waiting and waiting and waiting on something that I'm really bullish on. So I think now we're getting to the levels, and that's my level basically.
So just on that, still, let me ask, because you obviously have been waiting for this level for forever, but were you I won't say blindly trade it, but will you weigh up what's going on and why we're down at this level before making the play, or is it this is my level, that's what I've been waiting for, I'm going for it either way?
Well, I've made my decision which way I want to be trading this, and I want to always be trading this on the long side. And then, obviously, I look around at what's happening in the global environment, but I look at technicals to get in, and this is the level that I really, really like. And for people who have been following me for a while, the last time I did this, because I'm not a day trader, okay? People know this if you follow me. I have multi-month or sometimes year horizons. And I tend to be early sometimes. So the last time I got long, proper full size in silver was in 2018, mid 2018, if I recall correctly. It was somewhere around 15. My average, I scale in and I scale out usually around 15 average. When COVID hit and silver hit $12, or 12 and a half, what was it? That was that was a big shock, but I don't use leverage. I use very, very low leverage. So I should have added there, but I didn't. So I just kept through it and then unloaded at an average of around 25. So it took about 2 years for the trade to start working, but when it worked, within 3 or 4 months, it went ballistic. And this is what I'm going to be looking to do again. And, I'm going to, if I get in at 1880, is there a chance we go back down below, 17s? Could do, yeah. But I pick my level. As I said before, I tend to be a little bit early, although I'm trying to correct this fault of mine. But, when I have very strong conviction on something, I want to get in. So that's my plan. I've been right, I've been wrong many times in the past, but that's what I'm aiming to do.
Yeah, I've been the same every time going too early. Something we spoke about, I think last week, going too early in a trade, and sometimes you gotta buy a little bit just to scratch the FOMO itch, and then you can move on. Anyway, Kay, I'll let you carry back on, mate.
Yeah, okay, I was just unmuting. So we can see in the longer term this 1887 here again. Here again, this 1870. So it's a bit of an important level there. As a matter of fact, I bought like really tiny on Friday at 19. What is it? In somewhere in the 1930s. And I'm also planning to add here in this area, same levels as Telios really. But I'm keeping really a closer eye on myself at how the global economy is performing, because if we don't get good performance, since silver is in an industrial metal, if we get more pain, there might be a bit more pain here. So I'm actually not going to go full steam ahead. I'm just adding to my very long-term position. As people know, people of the Flow Show, they know that I've been in, well, yeah, basically around here, and then scaling in and out on the way up, and I took advantage of the, how should I call it, the Reddit revolution. We took it at $30 to take profit, and then started on the way down to, but really very tiny, just to have something in it to get long again. So on Friday I added a little bit, just in case we don't go there, and then I'll add on here again. If we go back into the 20s. There's this low here around 2040. If we go back above, I think we might be done, and then perhaps it's even good to try to accompany the move to get back to the top end of this channel for a starter at least. Okay, moving on. What are we looking at? I'm gonna bring it back on. I took profit here on this Friday morning dropout that we had on the Euro Canada. I'm waiting. I'm sitting back, but I'm a bit afraid that we might actually do those lows that I was talking about earlier during the prior shows. That we may go and have a look in the 130 zone before the Bank of Canada, because we have the Bank of Canada coming on this week, and then the ECB is not until next week, and Bank of Canada is going to create more divergence before ECB will start to work on its own, bringing back a bit of divergence with de facto hikes. Although I think quite a bit of the divergence is priced in, there's still the fact of, if you're long euros, now you pay for it against virtually everything apart from yen and Swiss still. But if you're long euros, you pay for it. So it's, to me personally, still a bit too early to get really long. I still can't buy a euro, to be perfectly honest. So to the main one, shown this last week, and I think this is still going to be the main level. If we get a fallout, if we get, since the data were coming off less than I expected as well, I think there's a fair chance, as I was talking about this level, this 99 to get printed at some stage. But at least the approach to, and then we will see what happens on the 21st when the ECB de facto comes out. There's going to be, I think they need to do 50 now for the euro to really start to stand up. If they only do 25, I think we can even go lower. But let's see what happens first. And I know that I'm not like I don't have a very popular view right now in our community, but I still can't buy a euro. The divergence is big. The US numbers are holding up a bit better than what I expected, at least, unless we get really more delay. I hear people saying that really the bad numbers will start to hit only in August or September. So we might still have a full month to wait. But in a full month, FX can do quite a bit of a move. So I really would not rule out that we are going to have this test of this 99 in the euro dollar. And then the other one that I'm still holding is the EURMX. I think sooner or later we can have a test because of the divergence, because of The global economy not yet falling apart, still short of it. I think we could have a test of this 20.5, 2030 zone, and why not back to the pre-COVID lows around 2004. A lot of the crosses have been doing a full retracement, and makes being the yield that it is right now. On a currency pair like EURMX, you can get quite a bit of carry if you're short. And the down move that has never been put really in danger. We had natural retracements to levels, but it hasn't really been put in danger since the break of 2270, which I've been trying to trade in episodes on the way down, and I'm back in now from the 2120s as people. So, anything else? Do you want me to look at?
Yeah, I don't know if you want to go through a quick run through of any of the other.
Yeah, okay. I'm just going to update it. It's basically still holding in the same range. This is $CNH that we are carefully watching. But the triangle is slowly. Okay, we had like a little breakout, but basically the triangle is slowly closing. China is still working on programs. I can't be short of this one yet. I still think that in the longer run we may have a look at these levels again. But we need to overcome this 672.5, 673 really to get going again. And for the time being, it just can't. So I'm leaving this one alone. I think you're still a bit long of this.
Yeah, I'm still long.
Patient, Ryan. So that's very good. Yeah. The only thing is, I mean, it's not really going anywhere. I think I missed a couple of dips to buy back to the 668 or 666, 667, but then I was a bit concentrated on other stuff, and it's still in here, you know. If it starts to go back above 2.5, 3, then I think we really have a chance to get back above 680. And in my longer term, longer term view, I think we could actually make it back all the way to 7, but let's see, because China is and even actually when the recovery will set in, they might not let the Chinese yuan strengthen, because they are going to need to export, right, to finance their own stimulus packages.
Yeah, no, and I'll do look at one myself as well, but I'll wait till you're done.
Yeah, okay. And then dollar rand is the odd one out. It's the rand has been hit by its local factors again. I think this 1705 is a bit of a danger zone. If we get above, we could have like quick runs up. I'm not saying I don't think we could reach 18, but if you break 1705, there's really not a lot before 17.5. So be a bit careful. I really think we need to start to get back below daily closes to get a chance to get back for a starter already to 1645.50 and or back lower into the supports. Really for the start of the week, that's about it for me. I give it back to you.
Yeah, no problem, mate. Grab that one. Here we go. Right.
Maybe if I look at,
you got me okay?
Sterling, because the people were asking, I see on the chat.
Yeah. I was just going to have a quick look at dollar one, because like you say, it has been going a bit sideways. I've been long this for a couple of months now, nearly, I think. And you're right, it's very much going sideways. I've been waiting since forever to try and add back down at this sort of 66.80, 66.50. I'm long 66.81 at the moment. I've got some away up in the 72s when we bolted up there. But I am just awaiting this break, and I was thinking we've got this move, obviously today a bit higher, coming on the back of the China news, potential problems again in Shanghai, but as cases, it's not really pushing high. So if you look at this one to trade, down into the 668 is your area. If you can get down into 67, you might be worth looking at longs for that side. But on the flip side, it's going to need a break of probably 73, 74 just to give it that boost higher. So again, like still, this one I've got a bit of patience on. I'm also still short USD Hong Kong, basically playing the top of the band that we're up here now. And if you folks, some of you folks may not know, the Hong Kong Monetary Authority, they have a band in place in dollar Hong Kong, 7.75 on the downside, 7.85 on the upside. So sometimes you're going to have to sit and wait, but as you can see, when it hits these zones, you can sit and wait for it. But I'm looking for the band to hold. I don't see any reason why they would change anything to do with that. It's a pretty low risk trade. I've got to stop 86.50. There's zero carry in it as far as I've been watching. So it's a cheap trade to try off the top there. You can never say never that something might change there. That's why I've got my stop pretty close above it. But this one, again, it's testing the patience just to keep going and going and going and see what happens. Onto Euro Sterling. This is another pair I've been long since down in the 83s. I'm average long 83.50. As Kay mentioned, that the carry is, I'm keeping more and more an eye on the carry costs because it is eating into my profits. I tried a little buy in this zone here last week just to see if the tech's held up. It didn't. We went all the way through. Now this zone has become resistance. We're seeing a little bit of action around the moving averages, particularly on the daily moving averages, as you can see here, finding a bit of support off the 255 there. I've got another zone down into 84.20, down to the big figure 84. This one, it looks purely euro driven. Obviously there's worries in the pound as well, but as has been the case in most pound pairs of late, there's no real reason to buy the quid. So this is more about the euro weakness. So even though this trade is still playing the divergence with the ECB and the Bank of England, if the ECB do go with 50, I think this is potentially one that's going to see a bottom put in temporarily or otherwise, and then we should get a move back up. I'm not expecting it to rocket up to 87 again or anything like that, but it might just change this week's or last week's mood from a bit more bearish to a bit more neutral or a tiny bit more bullish. But I'm happy to sit in this one. I'm looking ultimately, again, another waiting game for a break above this 87 area, and I'll look to play that. I might still play a short into that area if we see it, depending on the price action and why we're there, with a view to potentially reverse that into a buy stop, so a long if we break it, see if we can continue the trend up and maybe take some short-term pips as well as fold some into the core long. But if we do get under 84 particularly, it's going to look very dodgy, and I'll be keeping a close eye, particularly if we get down to the mid to low 83s. I'll be worried about what exactly is going on there, and I'll have to reassess my position in that one. So just one of the other pairs, just wanted to keep a quick look at before we move on. I haven't redrawn my fibs yet because every time I do, they keep moving lower. But the Kiwi, obviously, again, with the RBNZ coming up, again, if you're talking central bank divergence, this doesn't look like one where the market is looking at rate hikes from the RBNZ and thinking that, yeah, we should be buying this. So it shows that not all rate hikes are factored into their individual economies or individual currencies, them off against things like the Fed. Central banks are always going to trump your smaller central banks like the RBA, RBNZ. So if the mood hasn't changed in something like this one, if we're still in a bearish phase, and if we get to the RBNZ and nothing's changed, then really the market's probably going to whack any rallies based on the central bank response or what they do with policy. So if they do hike the 50 as expected, or maybe even higher, maybe set a higher path going forward, you're going to see the Kiwi rally. But I would question how long that may last if the reason why we're in this current downtrend hasn't changed. And if that's the case, as I say, it could be a case that we see Kiwi getting bought in the minutes after the decision, and then the market's going to probably come right back in and start selling into that strength. So that's the way I'd look at this one. If you're going to be up for the RBNZ, look at this one. Think about your levels. Look at some upside levels, and maybe we'll look at those tomorrow before the meeting. And pick a point to say, well, if it's going to be bullish, where are the break points? And if we can't get above those break points, so if we have a little bit of a closer look, you know, if we get up to somewhere like 62, 62 and a half, but we can't get above it, the text is going to speak for itself, and the market's telling you that's where it said it's stalled out and it's not going to let the price go above. And if that's the case, if it ain't going to go higher, the chances are it's going to go back lower. So anyway, that's another one. I'll have a look to see if there's any questions quickly before we finish up. I just want to remind the folks from Eightcap who are joining us today, joining us on a Monday and a Wednesday. The Flow Show is running all week. This is a daily show that we run every day, every week. So if you want to come and join us, then please do look up ForexAnalytix and you'll find the links there. And also, if you do want to come and join our ForexAnalytix trading platform, you can do so via this special link I've got at forexflow.live/platform. Give you a bit of information of what we do on our platform, everything that the dashboard that you have access to. If you come via this link, you can also benefit from a 20% discount for the lifetime of your subscription. And as you see, there's plenty of analysis that we put up here, and the guys and the team put up, patterns in play, active tickers. You know, we have the market info where you can come and see interbank market orders and options that we put up. These are options that I get from a contact at the interbank, orders that are a snapshot of bank orders at that moment in time. Plus, we have an extensive options expiries to show you all the expiries that are happening for the week ahead, as well as each individual day. You can see what's upcoming for the week. But if there's nothing else on the chat, and I don't think there is, I shall let you guys and girls go for today. Thank you very much to the Eightcap folks. We'll see you on Wednesday. Of course, unless you want to join us daily, feel free to do so. Have a great trading day, great trading week. Thank you to Stel and K-Man, and we shall see you all tomorrow.